Welcome, everybody. It's an absolute pleasure to be speaking with you here this year, having done so last year and hopefully to do so again in the future. Today, I'm going to be sharing with you some insights into the travel and tourism industry in the Asia Pacific region. So my name is Michael Shoory. I'm a lead economist for tourism economics and specifically lead economist for tourism in the APAC region. So today I'll be sharing with you some insights into the travel and tourism industry in APAC. Specifically, I'm going to be discussing our outlook for travel and tourism in APAC. So I'll be discussing our forecast for tourism flows and our expectations for the coming few years. Now, just briefly, to give you a quick rundown of who we are, who my company is, in case you're unaware. So Tourism Economics is a part of the global company known as Oxford Economics. So Tourism Economics focuses specifically on forecasting of travel flows, trends in travel and tourism, and bespoke consulting services, including economic impact work and custom forecasts. My team has more than 30 economists operating out of the US, the UK, Europe, and Australia. And each year we work with over 500 companies and destinations as research partners. So having provided you with a brief introduction, the first point I'd like to make is the travel recovery is gaining pace globally. So 2022 was the year where tourism restarted in earnest, but 2023 is the year when things are really going to pick up. So indeed, our projections are for total visitor nights across the world. So that's the sum of domestic and international visitor nights, to recover 2019 volumes this year, so in 2023. And the recovery of total nights in 2023 is going to be driven by domestic tourism. So globally, domestic visitor nights recovered pre-pandemic volumes last year. You can see that in the light blue line. And we expect further growth in domestic nights globally this year and going forward. However, inbound visitor nights, in other words, international travel, is still lagging domestic tourism. So inbound visitor nights are not projected to recover 2019 volumes until 2025 at a global level. So while the recovery is accelerating overall, it's worth noting that the international tourism market still has a couple of years to go to return to pre-pandemic levels. But in the meantime, domestic tourism will support the broader tourism industry. Now, the positive thing, of course, is that international travel is indeed rebounding after the slump of the pandemic years. So the recovery in international travel really began in 2022 in earnest and is continuing this year. So this graph shows the volume of international tourist arrivals relative to 2019 across all of the global regions. So you can see the Middle East at the top in light blue, Europe in red, and down the bottom we have Asia and the Pacific in gray. So what this is showing is that after all major travel restrictions on international travel have essentially been eased, we see travel picking up. So that demand, that pent-up demand from individuals to travel, which they weren't able to do for 2 years, is now being realized. So China was the last major country to lift these restrictions, and it did so right at the end of 2022. Now, something you'll notice from this graph is APAC is much weaker in its recovery so far for international travel than the other major regions. And this was because in general, APAC was slower than other regions to lift restrictions on international and outbound travel. So that's why we have international travel recovery in APAC lagging other regions. It simply put, it started later than the others. Now, in 2022, even though we saw around much of the world, the international travel recovery starting in earnest, there were some constraints observed, which kind of did have an impact on traveler volumes. So as strong demand for international travel returned, we had airlines, airports, and some accommodation providers and others in the industry having to ramp up capacity quickly to meet the surge in demand. And this led to some constraints and obstacles in some instances. However, these constraints have eased somewhat, and going forward, we expect there to be minimal obstacles for demand to travel internationally and that growth in demand to be met. Now, before I dig more into the travel outlook, let's take a quick look at the global macroeconomic context or the global macroeconomic environment against which we're seeing this travel recovery take place. So the key topic that was talked about last year in economic circles for the global economy was inflation, which in turn was driven by supply constraints in a number of industries and, of course, energy prices. Now, those inflationary pressures have eased somewhat since their peak. So inflation, or the increase or rate of increase in prices, is falling in many major economies. However, it still remains elevated. So a return to lower, more stable levels of inflation won't be immediate. There's still expected to be price increases that are somewhat elevated until 2024 at least. And inflationary pressures, as a reminder, do have an impact on the travel industry because they erode household income and raise prices. So they ultimately affect demand for travel. But these pressures have eased somewhat. Now, even though there are still elevated inflationary pressures, it's worth noting that our baseline expectations is that at this stage, a global recession will be avoided. So economic growth globally has been a little bit better than expected for the most part in the first few months of this year. However, we are expecting there will be negative growth for advanced economies overall in the third quarter of this year. However, this negative growth in advanced economies will be offset by positive growth among emerging market economies. So those advanced economies such as the US and Europe in aggregate are shown in the red bars. China is shown in the yellow bars. Other emerging market economies are shown in the gray bars, and the world overall is shown in the blue line. So what this is showing, as I mentioned, is that the weakness in advanced economies in that third quarter will be offset by some strength in emerging market economies. So that's our central expectation, for a recession to just be avoided globally. It's worth noting that while overall this growth profile isn't especially strong, it is a little bit better than what we were expecting late last year. So the outlook has improved a little bit. However, it is worth noting that there are downside risks to the global economy. So this graph shows our forecast for global GDP. The baseline or central expectation is in the dark blue line, and there are a number of scenarios around that we believe are plausible. So looking at these plausible scenarios, you'll notice that the risks are skewed to the downside. So in other words, there's a greater chance that GDP will be weaker than the baseline than the chance that it will be stronger than the baseline. So while our central or baseline expectation is for there to be no recession at the global level, there are risks worth keeping in mind for the outlook. As evidenced by the recent bank failures in the US and Europe, and of course, some ongoing weakness in consumer sentiment. So while things are looking a little bit better, there is still very much a great deal of uncertainty and some downside risks in the outlook. Okay, so I've shown you a snapshot of the global economy, but now let's look at the tourism outlook specifically. So this graph here shows the volume of visitor nights across the world relative to 2019 levels. And it shows them for domestic travel and also for international travel of different hauls, or in other words, different distances. So what this is showing is that domestic travel will recover first. That's in the red bars. I've already mentioned this. And the main reasons for this is because domestic travel is cheaper and the transport availability is better. However, within international travel, we expect trips and travel of different distances or hauls to recover at different paces. So short haul travel is represented by the dark blue bars in this graph. So this is travel between countries within the same sub-region. So for instance, within Northeast Asia, say from Japan to South Korea, or say within Southeast Asia, so between Malaysia and Singapore. So this type of travel, which is of the shortest distance, is expected to recover soonest in the near term because this travel is cheaper, there's less uncertainty about transport routes, and travel between neighboring countries is more familiar. And we expect in the first instance, travelers, after the uncertainty of the pandemic, will prefer closer and more familiar destinations, at least at the beginning. Medium haul travel, which is in the light blue bars, is, say, for example, travel between sub-regions. So say between a country within Southeast Asia and a country within Oceania. And long haul travel, which is in the gray bars, is travel between major regions. So say a flight between Europe and Asia. Now, both of these forms of travel or distances of travel are not expected to recover 2019 levels until 2025. And that's because this travel is more expensive than short haul and domestic travel. And of course, inflation will have a relatively larger impact on airfares. So the longer the flight, more expensive the airfare, and ultimately the bigger impact for inflation on the dollar cost of that airfare. But let's look at the APAC region specifically. So international travel to APAC is expected to recover more slowly than is the case globally in the near term. So for both APAC, which is shown here in the dark blue bars, and the world as a whole, which is shown in the light blue bars, the recovery of pre-pandemic international visitor volumes is expected to take place in 2025. However, for APAC, this is happening at a slower pace, as you can see by the greater negative bars in 2023 and 2024. Now, this slower pace of near-term recovery for APAC is, as I mentioned earlier, because it has taken longer for travel restrictions to be lifted in many APAC destinations. Probably the most famous example of this is China, which is APAC's largest source market, and only lifted restrictions on inbound and outbound travel in very late December. However, while there is a slower near-term recovery expected for international travel in Asia Pacific, by 2026 and in later years, the pace of recovery for inbound travel is actually stronger in APAC than is the case globally. So there's a weaker near-term outlook for inbound travel to APAC destinations, but there's a stronger longer-term outlook. So while the next few years will be a bit weaker than some other regions, from 2026 onwards, a stronger growth profile is expected for international travel to APAC destinations. But although international travel will take longer to recover for APAC than some other regions, domestic travel will recover relatively quickly in APAC. And it's ultimately domestic travel that will support tourism in the region in the near term, while international travel is returning at a more gradual pace. So although in 2022 in APAC, domestic travel was slightly below 2019 volumes, this year in 2023, domestic tourism is expected to exceed pre-pandemic levels by 16%. And this is stronger than what we see in terms of growth relative to 2019 for the world as a whole. And this stronger growth continues for APAC throughout subsequent years. Now, this relatively quick recovery for domestic travel in the Asia Pacific region is because international travel among APAC residents is taking longer to restart. So while that is happening, there's some substitution among APAC residents who are swapping international travel for domestic travel. So domestic is getting a boost while international is weaker. But however, if you go a little bit further along, so from 25, 26, 27 onwards, the strong outlook for domestic travel in APAC also reflects demographic and economic factors. So essentially, there's a growing populations and higher propensities to travel in the APAC region, which are expected to drive domestic travel going forward. And domestic travel is particularly important for APAC. So domestic visitors make up a larger share of overall tourism in APAC than is the case globally. You can see that from the dark blue bars in 2019, domestic travel accounted for 79% of all travel in APAC, compared to 69% for the world as a whole. And throughout the pandemic, we've seen the domestic share of travel increase, both in APAC and the world in aggregate. But the important thing is domestic has remained much more prominent in APAC than it has overall in the world. So that prominence of domestic tourism in APAC is going to remain there for some years to come. So because the domestic share of visitors in APAC is so large and the outlook for domestic travel in APAC is relatively strong, this means that overall the aggregate volume of visitors in APAC is expected to recover more quickly than elsewhere in coming years. So as a reminder, this is showing international and domestic tourism combined. So on this metric, the outlook is similar for both APAC and the world as a whole in 2023, but from 2024 onwards, the projections are stronger for APAC. So it's useful to keep this in mind that even though the inbound tourism outlook is weaker for APAC than some other regions, while that inbound travel is catching up and returning, the domestic tourism industry will support broader tourism and operators in that sector. Now let's look at some individual country destinations in APAC. So this graph is showing, again, aggregate tourism, so domestic and international visitors in total, so the combination of those two. And it's showing 2023 visitor volumes relative to 2019 levels. Now, the first thing to note here is that most destinations don't recover 29 visitor volumes in 2023. They're negative, in other words, so they're to the left of the 0% line. However, some of the largest markets in APAC, such as China and Japan, do recover total volumes this year. And this in turn drives a recovery for the region in aggregate, with overall volumes being 2% higher than in 2019. So because we have a few very large markets that are recovering this year, that's driving recovery overall in aggregate, even though most of the countries are not going to see a full recovery this year. And the other thing to note is there's significant variation across country destinations in APAC. So China, Malaysia, Japan, New Zealand, for instance, up the top of the graph, have the strongest near-term outlooks, but Hong Kong and Singapore down the bottom are among the weakest. And it's also worth noting that the countries with the strongest aggregate recoveries, which are at the top of the graph, this is driven by the domestic market. So this graph here is similar to the one before, but it's showing the recovery of tourism across countries in 2023, broken up into inbound and domestic components. So in other words, the contribution of each to the recovery in aggregate tourism. So what you can see here is the light blue domestic bars are positive for all destinations, meaning we expect domestic travel to recover 2019 volumes for all of these markets this year. However, international tourism in the dark blue bars is negative for all countries. And you can see the role in each contributing to the overall aggregate for each destination that I showed you on the previous slide. So destinations with the weakest outlook, such as Hong Kong and Singapore, are driven by international tourism. So these countries rely very heavily on inbound visitors, so their recoveries will take longer. By contrast, countries like China, Japan, and Australia have very large domestic markets, and as such will receive faster recoveries. So you see that from the very large light blue bars, you have the domestic driving the recovery, while for the weaker markets, you have very large negative dark blue bars providing a drag on the recovery of tourism overall. And now I'm showing the aggregate profile. So this is showing the volume of domestic and international visitors combined relative to 2019 levels, but this time it's in 2025, so a few years further down the track. So what you can notice here is, first of all, there's less variation across the different countries as what there was in 2023, but also all these destinations have recovered 2019 visitor volumes, except for Sri Lanka. So that points to the stronger outlook a few years forward than what we're expecting this year. And it's also worth noting that these are still ranked in order of 2023 recovery. So you can see by looking at these how those rankings have changed a little bit. But overall, we still see for the most part, those markets with a stronger 2023 outlook still have got the largest positive bars in 2025. And once again, we can split this up into domestic and inbound contributions. And what you can see is there is a modest recovery in international tourist numbers for most countries. So those are the dark blue bars. So for most destinations, the dark blue bars are positive. Not by much in some cases, but they're still positive. Domestic travel in the light blue bars is, again, the key factor driving the strongest recoveries for these top performing markets. So China, Japan, and other countries with very large domestic markets have the strongest outlooks because domestic is recovering more quickly and because the volumes are so much larger. And again, countries that rely more heavily on international tourists, such as Hong Kong and Singapore and Fiji, still have relatively weak outlooks. However, there's less of a clear link. So as time goes on, the role of domestic tourism, although it's still very important, is less important in 2025 than it is in 2023. And that's because inbound tourism has had those couple of extra years to recover. Now, one more kind of key topic I just want to finish off on today and to share some insights on is the pace of recovery for Chinese outbound travel. So this is one of the key areas of uncertainty for the outlook for travel and tourism in the Asia Pacific region, given restrictions on Chinese travel have only been lifted in very late December. Now, this uncertainty is significant, firstly, because the restrictions have only just been lifted, but also because China is such an important source market for so many destinations in APAC. So before the pandemic, China accounted for 1/4 of inbound travel to APAC. So this is in 2019. That's what this graph is showing. China's share of all international visitors and spending to destinations in different regions. So in APAC, China accounted for 1/4, a huge share. And this was particularly high in Northeast and Southeast Asia. And indeed, globally, China had actually grown to become the largest global source market in terms of spending, or international or inbound spending in 2019. So it accounted for 12% of all international tourism spending. So globally, destinations in general have been heavily exposed to China and risks around disruption to Chinese travel. But this exposure is particularly large for countries in the APAC region. Now, within the APAC region, there are some destinations in particular that are very highly exposed to Chinese travelers. So this graph shows the countries that depended most on China for their inbound visitors in 2019. So these are the countries that are most likely to benefit from Chinese travelers returning, but also the most vulnerable to the risk of that return being slower than expected. So this excludes Hong Kong and Macau. But aside from these, the 19 top destinations that are most reliant on China worldwide are all in the APAC region. So these range from South Korea up the very top, for whom China accounted for 1/3 of inbound visitors in 2019, to 10% for New Zealand. And indeed, the only country that was in the top 20 of this outside of APAC is Switzerland. So you can see here how heavily exposed APAC destinations are to Chinese travelers. Now, our baseline projection for outbound travel from China points to a slower recovery than other source markets. So we expect visits to everywhere in the world from Chinese travelers in 2023 over the course of the year as a whole to be 66% below 2019 levels. And in 2024, these visits will still be 1/4 below 2019 levels. While this is more positive than what we were expecting, say, in November or December of last year, this is still much slower than the pace of recovery for other source markets. So the light blue bars in this graph show all other source markets in the world except for China, so every other source market. So you can see that much quicker pace of recovery for these other markets than China. And indeed, over the next few years, what we see is China's share of all global visits falling from 8% in 2019. It went even lower in 2022, 2021, etc. And this year, it's only going to recover to 4%. However, by 2025 or 2026, China is expected to have recovered its share of global visits, and Chinese outbound travel will again outpace that from other source markets. So the key thing to take away from this is that in the near term, there will be a slower recovery in travel from China, which in turn will see a weaker recovery in inbound travel for many destinations in the Asia Pacific region. But in later years, such as from 2026 onwards, these destinations will benefit from relatively strong growth in Chinese outbound travel. And finally, I've just decided here on this graph to show you some other individual source markets that are very important for the APAC region. So China is still here in the dark blue bars, but now I've added in Japan, Singapore, the US, and South Korea. So again, we're showing the volumes of visitors from these countries, these source markets, to the world as a whole, relative to 2019 levels. So what you can see again is the outlook for travel from China is the weakest of these selected markets in 2023 and 2024, although it's actually not that much weaker than, say, Japan and South Korea, which are also expected to take some time to recover. However, by 2025, the outlook is stronger for travel from China than from the other four major outbound markets that we've shown here. So again, there's near-term weakness and uncertainty associated with Chinese outbound travel, but in later years, the outlook is relatively strong. So some short-term pain for hopefully some longer-term gain. Okay, so just to wrap up, I wanted to highlight the key points that I'd like you to take away from what I've shared with you today. So first of all, aggregate travel volumes, so inbound and domestic travel combined, are expected to recover pre-pandemic levels this year for the APAC region. However, there are significant differences across country destinations. There's a lot of variation depending on the destination in question. In economic terms, we see globally that inflationary pressures are easing and a global recession is likely to be avoided, but there is still significant economic uncertainty and downside risks. For the APAC region, inbound travel is going to be weaker in the near term than for some other regions and globally as a whole. However, in later years, there is a relatively strong outlook for inbound travel for APAC destinations. In the meantime, domestic travel will provide some support for the tourism industry in APAC. And finally, a key area of uncertainty around our forecasts and just general outlooks and expectations for the tourism industry, especially in the Asia Pacific region, is the pace of return of Chinese travelers. So this is a key area of uncertainty for APAC destinations and one we're going to be watching closely. So thank you very much, everybody, for attending and for listening. It's been an absolute pleasure speaking with you. And please get in touch with any questions you may have.